Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Atlantic Union BANKSHARES CORP quarterly report. Atlantic Union Bankshares Corporation offers a wide range of businesses and services to consumers and businesses in the United States. The company's services include banking products, checking, savings, time deposit, money market accounts, certificates of deposit loans, commercial, industrial, residential mortgage, consumer purposes debit and credit cards treasury management, and capital market services wealth management and private banking trust, and financial planning services brokerage and investment management services equipment finance, and mortgage banking services, insurance products. These services are offered through various channels, including full-service branches, ATMs, mobile banking, and internet banking. The stock price of Atlantic Union Bankshares Corp. has dropped by over 21% in the past year due to several key events. The company's disappointing fourth-quarter earnings, which fell short of analyst estimates, contributed significantly to the decline. Additionally, missed revenue and diluted EPS in the third quarter further impacted investor confidence. The regional bank sector as a whole faced challenges in 2023 and 2024, including higher interest rates and bank failures, which weighed on Atlantic Union Bankshares' stock price. The company's underperformance compared to its peers added to concerns over regulatory changes and uncertainty in the industry. More recently, U.S.-China trade tensions have also affected the company's share price, with potential new tariffs and restrictions on mineral exports contributing to uncertainty among regional banks. These factors have collectively led to a decline of 27.98% year-to-date as of April 3, 2025. The primary drivers of revenue growth for a financial institution are multifaceted, with several key factors contributing to an increase in revenue. Net interest income and non-interest income have seen significant increases, totaling $25,333 and $2,602,283 respectively. The total loans held for investment, net of deferred fees and costs, has also increased by $8,890,552. Additionally, securities available for sale at fair value have risen by $1,825,357. Furthermore, growth in interest and dividend income from both wholesale banking and consumer banking segments has contributed to revenue growth. Organic loan growth, LHFI, and purchases of AFS agency mortgage-backed securities and HTM municipal bonds have also played a significant role. On the other hand, several factors have led to a decline in revenue. Loans held for sale have decreased by $144,960, while proceeds from sales have increased but are considered a decline in the context of revenue growth. Corporate other has seen a decrease in income before income taxes. In conclusion, the primary drivers of revenue growth or decline can be attributed to a combination of factors including net interest and non-interest income, loan growth, securities available for sale, and changes in various business segments. Net income and profit margins overview. The financial summary reveals a significant increase in net income for the company over the past year. For the 3 months ending September 30, 2025, net income rose by $15,725 to $92,140, while for the 9 months ending September 30, 2025, it increased by $10,403, 6.9%, to $161,749. Profit margins also showed a notable improvement. Net interest income margin jumped from 2.93% in 2024 to 3.75% in 2025, while non-interest income margin rose from 0.73% to 1.04%. Operating profit margin increased from 9.55% to 10.35%. The adjusted operating non-interest income margin also saw a substantial increase, reaching 56.55% for the 3 months ending September 30, 2025, and 85.31% for the 9 months ending September 30, 2025. These improvements in net income and profit margins can be attributed to various factors, including increased efficiency, effective cost management, and strategic business decisions made by the company's leadership. The company is indeed generating positive operating cash flow, as evident from the financial summary. The data on page 9 shows a significant increase in net cash provided by operating activities, rising from $210,163 in 2024 to $2,122,000 $903 in 2025. Furthermore, the operating cash flows from operations also demonstrate an upward trend, increasing from $10,802 in 2024 to $16,680 in 2025. This indicates a substantial improvement in the company's ability to generate cash from its core business activities, suggesting a positive outlook for the company's financial health. The company's debt level and interest expenses have undergone significant changes over the past year. Total liabilities have risen by $10.7 million, with long-term borrowings increasing by $350,379 and short-term borrowings rising by $272,201. The total debt level is not explicitly stated, but interest expense has increased significantly, with a 30.6% rise in 3 months ended September 2025 compared to the same period in 2024. This trend continued over 9 months, with a 25.8% increase in interest expenses. The average rate paid on interest-bearing liabilities decreased from 3.4% to 2.93%, but total interest expenses still rose by $101,920, 25.9%, from 2024 to 2025. Management is optimistic about the company's outlook, citing a positive strategy that involves acquiring other banks. They expect continued growth in loans and deposits, driven by organic expansion and strategic acquisitions. Management also aims to diversify the investment portfolio to minimize risk and believes their liquidity is sufficient to meet customer needs. The company will focus on navigating potential macroeconomic challenges while maintaining a strong financial position through adjusted measures and interest rate risk management tools. Acquisitions and divestitures overview. In recent years, the company has undergone significant changes through acquisitions and divestitures. Notably, 2 major acquisitions were made: Sandy Spring Bancorp, Inc. in April 2025 and American National Bankshares, Inc. in April 2024. On the other hand, the company has also engaged in several divestitures to optimize its portfolio. These include the sale of $2 billion in performing commercial real estate (CRE) loans in the second quarter of 2025, as well as the disposal of equity interest in CSB and certain CRE loans and securities. The company has a history of paying dividends to its shareholders. Specifically, it declared and paid out dividends in the following amounts: $0.34 per common share for the 3 months ended September 30, 2025, $1.02 per common share for the 9 months ended September 30, 2025. Additionally, the company has also made quarterly dividend payments on its Series A preferred stock and paid cash dividends on its common shares. Concerns over inventory buildup and supply chain disruption exist. There are valid concerns regarding inventory buildup and supply chain disruptions in the current economic landscape. One significant factor contributing to these issues is the potential negative impact of U.S. trade policies and practices. This has created uncertainty and instability within global supply chains, leading to increased risks of inventory accumulation and disruptions. That concludes the financial summary for Atlantic Union BANKSHARES CORP. Feel free to comment below, and I will be happy to answer them when possible.